This is Dan Max, the trading agent. This is a stock trading and recap channel that I wanted to share to the masses. In a probability game, there's no certainty. Here are my insights and predictions.
This is Dan Max at eXp Realty, aka the trading agent, with a little back to basics on covered call writing. If you're not familiar with it, I would definitely check such out. It's definitely a strategy that I like to use to lock in gains when I've made money on a trade and not sure what the upside is. I get paid to just wait. So, I don't know. Gilles Pieter asked for this video, and you know what? You ask, you shall receive. So I would start with Investopedia to really understand what a covered call is. You're selling premium to someone in return for the option to buy the stock at a future date at a future price. That might seem confusing, but just think of it as you're selling the right of a stock at a particular price. So, for example, Tesla, if you're selling a stock call option, at a particular price, you're going to get paid premium for that right. So getting that premium allows you to put money in your pocket, and also it will limit your upside based on the strike price. But it will also reduce your cost basis because you're receiving that premium. This can seem pretty confusing to a lot of folks who are newer, but it's a strategy that Warren Buffett's been using forever. I mean, he is the king of covered call writing on Coca-Cola. He shaves off a quarter every quarter or every month on Coca-Cola options because the stock doesn't move. His cost basis is probably negative 100. Who knows? But it's a great strategy. Like I said, if you've made a lot of money and you're not sure it's going to go higher, you're able to reduce your cost basis by collecting that premium. But again, the warning is you're limited to your upside because you might have to you're giving someone the right to the stock at a certain price at a future date. So you might be giving your stock up if it keeps running. So that's where it's really important to know where you are on the chart and what the potential risk reward is. And, anyone who's been following me and watched previous videos know I was trying to be honest with Tesla holders. They're a little excited when things get running higher, but this isn't the first time, Elon Musk has sold stock at the high. The guy's a freaking genius. He's been managing companies and just expectations in the companies he's worked for forever. He knows buy low, sell high. He'll sell stock at the highs. He'll buy it back at the lows. He's always done this. People don't realize he sold stock, and so that when they do secondaries or some sort of buyback, he's involved in it. It's just study it, Google it. Don't take my word on anything. Verify it yourself. Because one of the things we talked about is this chopping pattern. In 2021, we said it was going to drop, and if you looked at it, it went from 900 down to 575. I mean, that's a big move. But it also ran up from Jesus. I mean, look at this area. I mean, it went from $62 pre-split up to that number, 90. So that's a monster run. So what is the upside potential in Tesla now? Well, we talked about it. Once we got into this blue zone, any of the fibs, you should probably be selling covered calls because the end of a move is usually what? The vertical straight line move, the blow off exhaustion. Chop, 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 blow off. So if you're selling covered calls, you were able to put premium in your pocket. So let's look at one of my burner accounts just to kind of see how that looks. And so here are the covered calls, say on Tesla. Say you wanted to go out to January of 2021 at the 150 strike price, you would be paid at the bid $111 per share or per share on the option. Now keep in mind, options are only written on 100 share lots. If you don't have 100 shares, you cannot write a covered call or a covered put you can't write any options against it unless it's naked. Now you can sell options naked. We can talk about that in another video, but if you're trying to write a covered call so that if you possibly do get called out of the stock, you need to sell one option for each 100 shares you own. So hypothetically, if you own the stock, 100 shares of it, and you were worried about Tesla, I wish I could have done this live and shown people, but as of right now, let's just say, for example, if you think it's probably done going higher for the short term, next, say, maybe it takes months to consolidate. Who knows? You could sell the 1150 option, even though the stock is at 1135, for $110 a share. That premium would go into your pocket, aka your account, And that money would be there unless, and it will stay there, unless you close the trade out. And so you have to buy to close an option covered call. Remember, sell to open. Sell to open. If you want to, write a covered call, you have to sell it to open, and you have to buy it to close. But you would get paid $110 per share. That'll cash will go in your account, and now you own the stock, whatever your cost basis is, minus $110 per share. Now, if the stock, say in January of 2021, I think it's the 21st, so it's a lot of 20s there. If it's below 1150, guess what? You keep all of that premium. And if it's above it, that $110 over 1150 becomes your max point, like your max cap. So 1150 plus $110 is $1,260. So you would make gains up to $1,260, which if you did, look at that. It's the 2 times range. Will it go much higher? I don't know. But that limits your upside. So if you bought at 500, you sold the 1150 covered call, you are making money or breaking even on that covered call unless it gets over 1260. Because then think about it. If you have to give someone the stock in January 21 and that's at $1,300 and they gave you $110 a share, well, now it's at 1150. Now that it's at 1300, the option is worth $150 because now it has more intrinsic value. This might seem confusing, but think about the process. If you're collecting money at a strike price, just add that amount to the strike price, and that's your upside. That's where you start actually not making any more money over that. So again, 1150 plus say the 110 on the January 21 1150 strike price means you are capped at 1260. Over 1260, the person who bought the option is going to make money. But this is what's great is if you know in your mind that, hey, you know what? I had a really good trade. I've owned Tesla now for a long time. I think it's possibly due for some pullback. Well, guess what? You sell that option and say Tesla goes lower, you can buy back that option at any time. You don't have to hold it to expiration. Options can be traded. So if the option was sold to open at $110 and in a couple of weeks Tesla's in the 1,000, 1,100 range and the option's at $50, you could take that $60 a share and put it in your pocket. You can trade covered, the covered called strategy. You can use it to, if you think the stock is bottoming and to go higher, then maybe you close out the sold to open option and buy it to close. Just keep in mind, it's a good strategy when you're unsure. And that's why I like it, because if you trade with the probability mindset, you have to think about what is your upside. After something doubles and it's coming into the 2 times range, Elon selling stock. If he's selling stock, do I want to be buying? I don't. I take the guy for his word. So does it mean it's going to 0 or 500? I have no effing clue. But if he's selling stock, why wouldn't you sell covered calls to hedge it? And again, you can go deeper in the money if you'd like. Say you sell the, where your cost basis is say 700. You sell the 700 call when it was at 1,200. You got paid $500 an option. At that point, you actually become a bear because you're hoping your option that you sold to open, you can buy it back for $200 a share if the stock gets pummeled. It's a way of locking in your gains without selling the stock. And a lot of people are not familiar with this and don't realize literally Warren Buffett does this on all of his favorite stocks. It is something that he knows the mechanics of the market. And if you know the mechanics of the market, you understand that the options makers are not paying out the people who are buying options. They are always trying to collect the premium on the intrinsic values fluctuating, but the volatility and implied volatilities of these stocks and the options coming down. So they lose their value. So if you're selling something that looks like one of those time sand clocks, it's just drip, 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 drip. And if you've bought options before, you've probably seen this where the option value just continues to drop, even though the stock might be flat or even up. But if you bought the wrong strike price, you're seeing that decay. And again, when you depends on what kind of options you sell, because we can talk about this in another video, in the money, out of the money, at the money options, they all act differently. So I hope this helps. If you have questions, come by the Discord room. I can go through and show you another example. It's not rocket science. It might seem a little unfamiliar and a little nerve-wracking at first, but if you are comfortable with the stock price action, knowing that you need to hedge it, this is a great strategy because it might limit your upside, but you're able to reduce your cost basis. And I think that's the one thing that people forget about. I'm not worried about my gains. I'm worried about what I can lose. And if I buy Tesla stock and I don't ever take any gains, I don't hedge it with covered calls, I don't take any profits, the market's eventually going to take it. And the higher something runs, the more likely it's going to be taken at some point. There's no guarantee on where the moves end. You can try to identify, and we talked about these dojis. I thought the indecision was kind of perfect to hit the 2 times range. But guess what? We didn't get up there. And so then it proceeded to drop 250 points. That's a huge amount. If you could have been selling covered calls up here, I guarantee the covered call writing made you money if you sold the right options. And when I say the right options, you sold them at the money or in the money, or even out of the money. If you sold out of the money options, they got absolutely slaughtered. And you could have bought them back for 30, 40, 50% gains. Study options. Here's the biggest thing that I always tell people. If you're unsure how they work, practice trade it. Open a practice trading account and do a practice covered call writing strategy so you can see how options move. I've been trading for 20 years. I know how options move. I know how the implied volatilities blow up when the stocks are moving quick, because implied volatility, the bigger the move, the higher the implied volatility. Well, after something moves pretty crazy and fast, it usually chops and slows down. It's always a reversion to the mean in the market. You have to play the odds. It's like the dealer getting hot in blackjack. At some point, she's not going to win all the time. The reversion to the mean, to the natural odds. I hope this helps. I know this is a lot, and I just feel like in a Back to Basics series, you need to hear all the details of it. And again, come to the Discord room, ask questions. If I can help you, I'll try. I appreciate it, because I feel like everybody who I help will grow and share this with others to help inform others, because the next generation of traders is not going to rely on financial advisors. If you actually know them, they're salespeople. They don't know shit about the market. I come from that industry. It's a complete joke. They don't know what the fuck is going on in trading. They just tell you to buy, and they collect their percentages. That's all they're trying to do. They're not trying to really trade. They don't think they can predict the market. And again, if you're in a probability mindset and you know how to trade and manage your wealth, why wouldn't you want to learn how to do it? I mean, it's just a no-brainer. All right, Dan Max at eXp Realty, Back to Basics. Man, covered call writing. I apologize, this is a long video, but there's a lot to say, and I hope I covered it. And again, check me out. Come by the Discord room. Any questions you have, don't hesitate to ask. The worst case scenario is I say, sorry, I can't help you, or I'm busy. It's that simple. Take care, guys and gals. Cheers.
Thanks for watching. Please subscribe if you like the content. Also smash the like button, share with your friends, and add a comment. If there's a topic or stock you'd like me to give you insight about, let me know in the comment section. I'll do my best to answer your question. Thanks.